Welcome back, tech aficionados, to your daily dose of all things market shaking in the world of technology stocks. Today in the tech world, Google has vaulted into the headlines, but not for the reasons they'd hope. Amidst the race to dominate the artificial intelligence space, Google introduced Gemini, their entry into the AI chatbot arena, which has swiftly turned into a contentious topic. This innovation was intended to highlight Google's prowess in AI, but instead, it showcased a glaring oversight in balancing AI's understanding of human diversity, inadvertently stirring a storm of backlash. The fallout from Google Gemini reveals deep-rooted issues within AI development, notably balancing the representation without veering into bias. Whether through omission or overcompensation, the aim was to address digital media's historic underrepresentation. Despite the well-intentioned initiative to promote diversity, the application ended up replacing images of white people with those of Black, Native American, and Asian individuals in historical image generation, crossing from inclusion into an unsettling bias of a new form. This debacle prompted an immediate response from Google, with CEO Sundar Pichai committing to working around the clock to rectify the biases deemed completely unacceptable by the tech giant. What was supposed to be a stride towards diversity-friendly AI morphed into a cautionary narrative about the societal impact of AI, emphasizing the need for tech developments to encompass a nuanced understanding of human diversity. Insights from Brett Farmiloe, founder of an AI startup within Google for Startups Cloud program, and former Google employees point towards an internal scramble at Google to catch up to competitors like Microsoft and OpenAI. It's suspected that in the rush to match the progress in visual AI made by competitors, Google hastily released Gemini, bypassing crucial steps that ensure new models are ready for production use. The aftermath of Gemini's introduction has propelled a conversation about the broader implications of bias within AI technologies. Large language models, foundational to generative AI products like Gemini, amplify any inherent biases within the training material. Correcting these biases poses a significant challenge, as they're deeply embedded into the model's probabilistic nature. The Gemini debacle has not only placed Google's approach to AI under scrutiny, but also sparked a broader conversation about the ethical frameworks guiding AI development. As tech companies navigate the intricate balance between innovation and ethical considerations, the incident with Gemini underscores the importance of inclusive dialogue with diverse communities. This dialogue aims to ensure AI technologies serve and reflect the richness of human diversity without perpetuating existing inequalities. In tech news today, Apple faced a significant blow from the European Commission, resulting in a hefty fine of more than 1.8 billion euros. This unprecedented penalty stems from accusations that Apple has misused its dominant market position by inhibiting music streaming services like Spotify from informing users of alternative payment methods outside of Apple's App Store. The Commission's stance is clear. Apple's decade-long practice of restricting developers from directing consumers to cheaper, alternative music services breaches EU antitrust rules, constituting unfair trading conditions. This finding, however, is contested by Apple, which plans to challenge the ruling, arguing that the Commission failed to present credible evidence of consumer harm and overlooked the competitive and rapidly growing market. In a contrasting stride, Apple also made headlines with its announcement of the new 13 and 15-inch MacBook Air models, equipped with the much-anticipated M3 chip. This move aims to bolster its product line amidst the backdrop of sales challenges, particularly in the MacBook segment. In today's tech landscape, Microsoft is making significant strides to cement its status as a major player in the artificial intelligence and robotics arena. The tech titan's latest series of strategic moves include a whopping total of 5 new investments, underscoring its ambitious aim for global dominance in both AI and robotics. Riding high on its colossal $10 billion investment in OpenAI, Microsoft is not resting on its laurels. It is actively diversifying its portfolio by injecting funds into innovative ventures spanning across the globe, particularly focusing on promising AI and robotics enterprises. Europe appears to be a central piece in Microsoft's global blueprint, with the company committing to invest millions into AI infrastructure across several key European markets. The plans disclosed by Microsoft entail a substantial investment of £2.5 billion in the UK, alongside significant commitments in Germany and Spain totaling $3.5 billion and $2.1 billion, respectively, over the coming 2 to 3 years. This investment is intended to expand Microsoft's next-generation AI data center infrastructure in these regions, further solidifying its technological foundations in strategic locations. Beyond these geographical investments, Microsoft's contribution spans various domains of technology. It has started expanding its investment horizons by funding Paris-based Mistral AI and India's Taurus Robotics, companies poised at the forefront of AI and robotics development. Among the ventures benefiting from Microsoft's financial influx are Mistral AI, which recently unveiled LeChat, a direct competitor to OpenAI's ChatGPT, and Figure Robotics, a pioneer in melding AI technology with humanoid robotics, which recently secured $675 million in a round of funding, including Microsoft. Microsoft's bold foray into AI and robotics extends beyond investments and into partnerships and collaborations designed to accelerate the development and deployment of groundbreaking large language models and other AI-driven technological innovations. With its comprehensive approach, Microsoft is not only investing in the future of AI and robotics, but is also laying the groundwork for a future where it leads the charge in driving significant transformation across a myriad of sectors, solidifying its position as a key driver of technological progress and innovation. NVIDIA, the tech powerhouse renowned for its graphics processing units, has once again emerged in the spotlight, making headlines for its significant strides within the artificial intelligence niche. NVIDIA's ascendancy in the AI market is attributed to its strategic pivot towards specializing in AI computation, a move that has positioned it as the undisputed leader in AI chips. The company's foresight in recognizing that AI computing could benefit immensely from GPU-based processing over conventional processors has been a game changer. This shift in focus towards leveraging GPUs for data centers towards the late 2010s catalyzed NVIDIA's rapid ascendancy in the AI domain. The company's prowess in AI chips has not only solidified its dominance, but forecasts suggest that NVIDIA commands an overwhelming 90% share of the AI chip market. Analysts project that this market, buoyed by NVIDIA's leadership, could exponentially grow into a multi-billion-dollar industry in the years ahead. This bullish outlook on NVIDIA's position within the AI chip market is a testament to the company's innovative approach and strategic investments in AI and data centers. NVIDIA's accomplishments and potential have caught the eye of notable investors. Among them is Stanley Druckenmiller, a billionaire investor who manages the Duquesne family office. His portfolio showcases a substantial commitment to NVIDIA, reflecting not only an endorsement of NVIDIA's current market position, but also confidence in its future trajectory. The investment firm's portfolio reveals that a striking 21% is allocated to two key AI stocks, with NVIDIA among them. This allocation underlines the significance of NVIDIA in the landscape of AI and technology investments, drawing further attention to the company's robust performance and the broader industry's bullish outlook towards AI technologies. Through its strategic focus and leading role in AI chips, NVIDIA has not only fortified its market position, but also ignited enthusiasm and confidence amongst investors, positioning itself at the heart of discussions concerning the future of AI and technology investment. Rounding off today's tech news, Spotify finds itself at the center of a significant regulatory confrontation involving none other than Apple. The crux of the matter is the imposing fine of more than 1.8 billion euros that the European Commission levied on Apple for its restrictive practices concerning music streaming services, including Spotify. This hefty fine stems from accusations that Apple abused its dominant market position by preventing services like Spotify from informing users about alternative payment options outside of Apple's App Store ecosystem. This long-standing issue, which Spotify highlighted back in 2019, revolves around Apple's alleged unfair trade practices and its 30% App Store fees, curtailing competition and choice for consumers in the music streaming domain. The European Commission's decision to fine Apple marks a pivotal moment for Spotify and the broader digital services landscape, signifying a rigorous stance against monopolistic practices in the tech sector. With the EU antitrust chief, Margrethe Vestager, accusing Apple of a decade-long abuse of its dominant position, the spotlight is firmly on Spotify, as it stands on the cusp of potentially gaining more freedom to reach its users without the encumbrances of Apple's policies. As Apple vows to challenge the ruling, asserting no credible evidence of consumer harm, the outcome of this legal battle could herald significant changes in how tech giants operate and engage with competitors within their platforms. This development not only underscores the ongoing tension between large tech entities and regulatory bodies, but also raises crucial questions about fairness, competition, and the future landscape of digital services. As we wrap up this segment, we're eager to hear your thoughts on this landmark ruling and its implications for Spotify, Apple, and the music streaming industry at large. Do you think this will level the playing field for streaming services? How might this impact your music streaming experience? Jump into the comments section and let us know your perspective. Your insights are invaluable as we navigate these evolving tech narratives together. Today's tech landscape has been a whirlwind of regulatory reckonings, strategic expansions, and innovations, painting a mixed yet decidedly vibrant picture of market sentiment. At the forefront is the European Commission's hefty fine on Apple, signaling a tough regulatory stance against monopolistic practices that could have ripple effects across the tech industry, potentially altering how tech giants engage with competitors and consumers alike. This pivotal moment, distinct for its implications on competitive practices, casts a shadow of regulatory oversight that could spell future challenges for tech behemoths known for their expansive ecosystem control. Meanwhile, zeal and ambition are palpable in Microsoft's aggressive pursuit of AI and robotics dominance. With substantial investments across the globe, notably in Europe, Microsoft is positioning itself as a stalwart of innovation. This strategy not only reflects confidence in AI and robotics as transformative forces, but also underscores a broader industry trend towards AI-driven technological shifts. Such aggressive expansion strategies emanate a strong positive sentiment about the future of technology, betting big on AI's role in shaping the next generation of global solutions. In the AI chips domain, NVIDIA continues to command attention with its dominant market share and innovative strides, bolstered by significant investor confidence. The company's specialization in AI computation has not only solidified its leadership, but also spotlighted AI's burgeoning role in driving future technological advancements. NVIDIA's narrative is one of robust optimism, fostered by groundbreaking developments and a perceived substantial growth trajectory in the AI market. On the opposite spectrum, Spotify's moment in the news, entangled with Apple's antitrust saga, highlights ongoing frictions within the tech sector surrounding fairness, competition, and market dynamics. This episode, while specific in its context, mirrors broader market concerns over equitable access and competition, posing questions about the landscape of digital services and regulatory interventions therein. Collectively, these developments convey a market sentiment characterized by a blend of regulatory scrutiny, strategic ambitions in AI and robotics, and evolving competitive dynamics. The day's news encapsulates a tech industry on the cusp of transformative shifts, driven by innovation and challenged by regulatory landscapes, reflecting a complex yet forward-looking market sentiment. Given today's news, I'd focus on NVIDIA as the stock of interest and lean towards a buy stance. The rationale behind this decision hinges on NVIDIA's commanding presence and strategic positioning within the artificial intelligence and chip-making sectors. NVIDIA's dominance in the AI chip market, commanding an overwhelming estimated 90% share, sets it apart as a leader in an industry that's only expected to grow in both importance and value. With AI technologies permeating every aspect of technological advancement, from autonomous vehicles to data centers, NVIDIA's innovation and leadership in GPU technology for AI computations make it a pivotal player in the tech revolution. Furthermore, NVIDIA's significant role in today's news is underscored by its strategic investments and the confidence shown by prominent investors. The acknowledgement by billionaire investor Stanley Druckenmiller, who has allocated a notable portion of his portfolio to NVIDIA, signals strong investor confidence in the company's future trajectory. This is further buoyed by the company's strategic focus shifting towards AI and data centers in the late 2010s, which has evidently paid off given its explosive growth and leadership status in the AI chips market. Deciding to buy NVIDIA stock is motivated by the company's robust position in a rapidly expanding market, its continued investment in innovation, and the broad investor confidence it commands. It's key to note, however, that investment decisions should be made based on individual financial situations and objectives. It's advisable to conduct thorough research or consult with a financial advisor before making investment choices. Wrapping up today's market activity, we dove into a whirlwind of developments across the tech landscape, spanning from Apple's significant antitrust fine in the European Union, Microsoft's ambitious global investments in AI and robotics, NVIDIA's dominant stance in the AI chips market, to Spotify's regulatory strife putting the spotlight on digital services competition. These stories not only shed light on the current state of tech, but also signal the transformative shifts, regulatory challenges, and strategic ambitions that could shape the industry's future. Remember to like, subscribe, and share this video with others who crave their daily dose of tech and stock market insights. Your engagement helps us keep the conversation going and provides valuable perspectives on the ever-evolving world of technology investments. Join us again tomorrow for another video where we'll unpack more market movements, dissect industry trends, and share insights to keep you informed and ahead of the curve. Stay tuned, and thanks for watching.